if you're having a tough time deciding between two investment choices, for example, the S&P 500 index as endorsed by Warren Buffett for the average investor versus Nolan Gouvier, hopefully I said his name correctly, he is endorsing the QQQ as a superior investment. So I'm going to play both of their videos, hear their arguments, and then I'm going to show you how I used Chat GPT to decide which one fits my investing style and how you too can use it for your investing style. Or so I'm gonna go with Nolan first.
Here's what I can tell you. Piles of data suggest that for the average investor to become a millionaire, one needs to have a broad market investing strategy and to stay consistent. Specifically investing in something like the S&P 500 or the total US stock market with an average yearly appreciation of over 10% has been the move. One could invest $500 per month in something like that and in 30 years would have about $1 million. To supercharge that a bit, I like to add in a growth ETF or two into the mix because some of the best ones have consistently hit 15 to 18%.
Now here's the growth ETF he's talking about. He doesn't specifically say it, but this is the Invesco QQQ, and these are the 5 and 10 year returns. Now we're gonna play Warren Buffett and hear his side of the story.
S&P 500 index fund is the one to use. That's the one I used in that bet I made for 10 years. It's the one I've told the trustee for my wife to put 90% of the funds I leave her into. S&P 500 is, I don't know whether it's 80% of the market value of, can buy in this country. And over, I think it's over 20 trillion. Buy to hold for a year. You don't want to buy with the idea that you can sell it in 2 years or 3 years, necessarily make money. You may, but if you buy it for 10, 20, just keep buying the S&P 500 index and forget about all the other nonsense that's being sold to you, because I'll guarantee you one thing about the stuff being sold to you, it will carry bigger fees than what I'm talking about.
Yes.
Yeah.
So let me introduce you to how to use Chat GPT to help you make your financial decisions based upon your investing style. Now I've already got Chat GPT pulled up in another window. I'm going to make it full screen here. And really all you have to do is go to chatgpt.com and it'll come right up. You may have to have a Google account to be able to sign into it and services for free. I'm using the free version, so there are limitations on how much I can ask it and how deep of research it can do for me. But it does have a couple of modes here. Chat GPT Plus is the one you pay for. I'm using the regular Chat GPT. And quite frankly, once you start using it for your everyday searches and research, you will quit using Google or any other search engine because it's just so easy. Now, don't count on it to be completely accurate. You may have to ask it to redo its research if you see something that doesn't quite look right. I have to do that occasionally, but it's pretty rare. Now, the most fun part is talking to it. You can actually talk to this. I used to type all my stuff in here all the time, and now it's just gotten so much easier just to talk to it. If you have a microphone built into your laptop or a microphone built into your camera, like I have, or I'm actually wearing a microphone, so it's also using that one as well. Or I can choose to use whichever one of these I want to use. So here we go. Hopefully, I won't get too tongue tied when I'm talking to this thing because I can usually speak faster than I can think. So to dictate, use a microphone here. If your microphone is not enabled, it will pop up over here most likely and ask you if you want to use ChatGPT to use your microphone. And you can see it's picking up my words, and I'm going to tell it to please ignore everything I am saying right now and start over. Actually, I forgot you can turn it off. I forgot you can turn it off. I'm still playing with this and learning the features, but it really came in handy for analyzing the QQQ versus the S&P 500 index for your investment style. So let's kick it off. I need to compare the S&P 500 index average annual return since it was first created versus the QQQ average annual return since it was first created. Give me the pros and cons as to why or why not I would want to invest in either one and compare it to Warren Buffett's investing style. Which one would he favor based upon everything Warren Buffett has said about investing? All right, let's see what it has to say. You stop it, you let it translate And even if you've messed up the words a little bit, it will figure it out. It tells me when it comes to figuring things out when I get tongue tied. And believe me, I was not that good at speaking into the microphone in the beginning. Looks like it's thinking. Now, depending on the time of day and the amount of usage for ChatGPT by everybody else in the system, it may think for a while before it comes up with the answer. Well, here are the results for my query. I think it took a little bit longer than expected because I asked it to compare everything Warren Buffett has ever said about the S&P 500 or investing. So made it think a little bit longer than I expected. So, but here is the output. And if you want to copy this output, leave me a comment below, and I will share a link to this document. But here's the breakdown. Looks like they have had about the baseline time frame. Now, in the first video, the guy was talking about the past 10 years or so. I'm comparing it to from the very beginning date of each one of these. So the QQQ, he was talking about 10 years ago. It actually opened up in 1999. If you compare it to the S&P 500, which was open since 1926, they both have approximately the same annual return. And here's some more information. Volatility and risk. Of course, the QQQ is going to be a higher risk because it has a higher concentration of technology-based companies. And the S&P 500 is a broad selection of the top 500 or the 500 biggest companies in the U.S. Which should you choose based on your own personal investing style? Diversification, lower in bear markets, better dividends, but also a lower upside. So the highs won't be as high as the QQQ, but the lows won't be as low as the QQQ. So QQQ, the best parts about it are it's got the biggest companies, higher upside potential, good if you believe in AI, semiconductors, innovation. But like I said, it's susceptible to tech regulation, overvaluation, and concentration, meaning too much money concentrated in one tech sector, meaning too much money in one sector of stocks. Which one is the right move if you're thinking 5 to 10 years out? If you're short sighted, you might panic sell during downturns. You may hop in and out and lose the compounding effect, and you may be overweight in technology without balancing out the risks. If you're planning out 5 to 10 years, it says do a 60-40 split, 60% S&P 500, 40% QQQ for balancing out. Here are some options here. The S&P 500, a core of S&P 500 or total market index, or a satellite. I'm not sure what that means, unless it means a balance of all these funds and stocks. I don't think those are actually stocks, but I don't know what the satellite thing means. Here's what would have happened to $10,000 if you were to put it both in S&P 500 index and 10,000 into the QQQ in 1999. In 2023, the S&P 500 would have appreciated to 68,000, about that much, and the QQQ would be at 83,000. Now, this is a much shorter time frame than the total time frame of the S&P 500 value. And here are some options at the bottom where it asks you what else you would like to have done. It'll help you out and try to suggest things that you might use as tools to better refine your investment choices. So what it comes down to is this a boss move or a bad strategy? That's really up to you. And as I said, if you would like a copy of this, let me know. I'll set up a Google Doc and share the link with you. And if you would, like and subscribe, and I'll talk to you later.